In this video, we're going to talk about bodily injury liability coverage in the context of car insurance. So bodily injury liability is going to cover any expenses related to people that you harm in an accident. So if you're responsible for a car accident and you injure some people, you could be held responsible for their legal costs, for their medical bills, and even any lost wages that they incur because of the accident. And bodily injury liability is usually part of mandatory minimum legal insurance, at least in the United States. Every state has different rules regarding how much bodily injury coverage you need. Let's walk through an example and I'll show you how it works. So let's say that you have the legal minimum insurance in your state. Now in the U.S. it's going to vary depending on what state you live in. Each state is different. Well, let's say that your insurance here was $5,125. And what that means, that's a split limit, and I'm going to have a different video on that. But let's just focus on the first two numbers right here because these pertain to bodily injury coverage. The first number, this 50, means that your policy will cover up to $50,000 in damages per person. Okay, now I'm going to explain that in our example in a moment. And then let's look at this 100. So the 100 is per incident. Okay, so per incident. Now if that's confusing, let's just go through the example to make it a little easier. So let's say that in your example, or in this example, your accident harms three different people named Tom, Jane, and Harry. So these are the three people. And then I've got different damages that I've laid out that you've done to each of these people that you've been found. Let's just say it's just their medical bills. Let's not make it complicated. Tom has $50,000 in medical expenses. Jane has $65,000 and Harry has $10,000. Now you're trying to figure out, what is your insurance policy going to pay out? Well, let's go back to this split limit coverage here. So per person, it will pay out no more than $50,000. So let's take a look at these damages here. We see that Tom has 50, so that's not an issue. Harry has 10, that's not an issue. But Jane has 65. So we know right off the bat that Jane is not going to get, at least from the insurance company, she's not going to get the full 65. So let's just knock that down to 50. Because the first part of this split limit for the insurance that you have, you've got $50,000 per person is the most your insurance company will pay out. So your insurance company will pay out no more than $50,000 to Jane. Now, we need to say, okay, let's look at the entire incident. Right? Let's look at the whole accident. Let's add all these numbers together because the cap for that is $100,000, right? So we look at no more than $50,000 per person, but then we have to take a step back and say, let's look at the entire accident itself and say how much that adds up to. So at this point, we add these together. We'll add the 50, and the 10, and that's going to give us $110,000. But now we have an issue because our per incident max, our policy max, is $100,000. Okay, so now we know we can't pay the 110, or the insurance company isn't going to pay the 110. The most it's going to pay is $100,000. So in this example, the insurance company, this is your insurance company, so insurance pays $100,000. Now, let's take a step back here for a moment, and let's think of the actual damages you caused. So the actual damages you caused were the $50,000 plus the $65,000 plus the $10,000, right? If you add those numbers up, you actually get $125,000. So there's $125,000 in damages, and we'll put that right here. $125,000 actual damages. And your insurance is paying $100,000 of that. So what do? We subtract the $100,000 the insurance is paying from the $125,000 in damages that you did, and that leaves us with $25,000. Now what this $25,000 represents is it represents the out-of-pocket costs to you, out-of-pocket costs, in the sense that, look, you've done $125,000 worth of damages here. And so your insurance is only covering $100,000. That leaves you on the hook for $25,000 in damages. Now, Tom, Jane, and Harry, they can, if they choose to, come after your personal assets, right? They can hire attorneys and say, look, you still owe us this $25,000 in damages that weren't covered by your insurance, right? So they can try and have your assets seized and so forth to try and get this $25,000 to be recovered from you. Now, truth be told, if you don't have any assets or so forth, they might end up deciding, you know what, it's not even worth it to come after you. But that's not a chance that you want to take, particularly if you have a lot of assets. So what you can do is say, look, even though this is the minimum coverage here that I need just to be in legal compliance with the state, you could actually say, well, I want to pay more. I want to pay more for my insurance premium every month or every 6 months, whenever you pay. I want to pay more to bump up these numbers. Maybe instead of 50, 100, 25, maybe you want $1 million of coverage. Right? So you say, I want $1 million per person, $1 million per incident. Because think about it. If you injure someone with a vehicle very easily, you could seriously harm somebody and cause up to $1 million of damages, no problem. Right? I mean, what if you crippled somebody? God forbid. So you could cause serious damage with a vehicle, and by just paying maybe an extra $100 every 6 months, you can actually get your policy limits, get these split limits, get them higher, maybe up near $500,000, $300,000, $1 million, something like that. Whatever you can afford, you're actually buying yourself peace of mind. In the off chance that you do cause an accident that harms some people, then you at least know that you're not going to have all your assets taken away and go into debt for hundreds of thousands